John and Matthew share profit and losses in the ratio of 3:2. They admit Mohan into their firm to 1 by 6th share in profit. John personally guaranteed that Mohan's share of profit after charging interest on capital at 10% per annum would not be less than rupees 30,000 in any year. So here two partners are John and Matthew. They are going to share their amount of profit and losses in the ratio of 3:2. They admit a new partner Mohan into the partnership firm as their profit share is 1 by 6th out of 1 share. Whole share, we are going to consider the whole share as 1 out of 1 share or the whole share. He is able to get the profit of 1 by 6th share. So here John personally guaranteed that Mohan's share of profit after charging interest on capital at 10% per annum would not be less than rupees 30,000 in any year. So in the previous problems, two partners are going to give the assurance to a new partner. If there is any deficiency in the profit, we will share the amount of deficiency in your profit. But in this case, the only one partner, that is John, he is personally guaranteed to the Mohan that after charging the interest on capital, which means after allocating the amount of or after distributing the amount of interest on their capital, they agreed to give rupees 30,000, at least 30,000 in every year. He can share more than 30,000 rupees, but not less than 30,000 rupees. At any cost, he has to pay the amount of deficiency to a new partner. So the new partner has to receive rupees 30,000 at any cost or more than 30,000 rupees, but not less than 30,000 rupees. The capital provided was as follows. So John invested rupees 2,50,000, Matthew invested rupees 2 lakhs, and Mohan invested rupees 1,50,000. So these 25,000 and 2,50,000 and 2 lakh rupees and rupees 1,50,000 before providing interest on capital. These amount are useful to give or to calculate the interest on capital. So while calculating the amount of interest on capital, this amount will be used. So before providing the interest on capital, we need to show the profit and loss appropriation account as on 31st March 2016. If new profit sharing ratio is 3:2:1. So in this problem, directly they have given the new profit sharing ratio, that is 3:2:1. In the absence of this new profit sharing ratio, first we need to calculate remaining share, then we need to multiply with the old share of the new partner's share, then we will get the new profit sharing ratio of a partners. But in this case, directly they have given the new profit sharing ratio is 3:2:1. So profit of the firm is rupees 1,50,000 before allowing interest on capital. Before going to providing the interest on capital, the organization has earned rupees 1,50,000 as profit. So organization earned rupees 1,50,000 of profit, but you need to share the amount of profit after sharing or after distributing the amount of interest on capital to a partners of the firms. Okay. So guarantee of profit and loss appropriation account as on 31st March 2016. Particulars amount in rupees, particulars amount in rupees. It is same as profit and loss appropriation account. So first, by profit and loss account, which is net profit brought down. So profit for the accounting year is rupees 1,50,000. So in the previous problem, the 1,50,000 should be divided to 3 partners. But in this problem, they have specifically stated that you have to share the amount of profits before allowing the interest on capital to a partner. So for that, first we need to share the interest on capital to a partners. Interest on capital There are three partners: John, Matthew and Mohan. John, Matthew and Mohan. John capital is rupees 2,50,000. Matthew capital is rupees 2 lakhs. Mohan capital is rupees 1,50,000. So the interest on capital is 10% per annum. 10 divided by 100, 10 divided by 100, 10 divided by 100, which means we need to pay 10% of interest on capital over his rupees 2,50,000. So he will get rupees 25,000 of interest on his capital. Matthew will get 20,000 of interest on capital. Mohan will get 15,000 of interest on capital. So the organization has to pay the interest on capital towards partners is rupees 60,000. So in the problem specifically they have mentioned that you need to share the amount of profit after allocating the amount of interest on capital to the partners. Out of rupees 1,50,000, if you have paid rupees 60,000 as capital, remaining amount is rupees 90,000. So organization is considering or sharing 90,000 rupees of profits among the partners. So partner is not going to share 1,50,000 rupees. He is able to share only rupees 90,000. Why? Because specifically they have mentioned that you need to share the amount of profits after allowing interest on capital to the partners of the firm. Now you need to share according to the ratio of 3:2:1. 3:2:1 means you need to add these three in order to get the total ratio. 3 plus 2 plus 1, that is 6. You are going to identify the ratio as 3 divided by 6, 2 divided by 6, 1 divided by 6. Total ratio is 6. Out of 6, John will get 3 portion, Matthew will get 2 portion or 2 shares, and Mohan will get 1 portion. 3 divided by 6, 2 divided by 6 and 1 divided by 6. 2. First partner is John. John's share of profits. John's share of profit. Profit is rupees 90,000. 90,000 rupees into his ratio 3 divided by 6. He is able to get 3 ratio out of 6 ratio. So 90,000 into 3 divided by 6, he will get rupees 45,000 as profit. Out of 90,000, he will get 45,000 rupees of profit. Next partner is Matthew. 2. Matthew's share in profit 90,000. His share is 2 divided by 6. He is able to get 2 out. Matthew's share in profit is rupees 30,000. Write down in outer column. Why? Because in the deficiency of share of profit in Mohan's profit, only John will share. So Mohan's share in profit is rupees 30,000, directly written in outer column. Next, Mohan's share of profit is rupees 15,000. That is 90,000 into 1 divided by 6, 15,000 rupees. But guarantee is 30,000. What is the guarantee amount? 30,000 rupees. Difference amount, that is 30,000 minus 15,000. Guarantee profit is rupees 30,000, but he is able to get only rupees 15,000. The deficiency in his profit is rupees 15,000. 15,000 rupees fully shared by John. That is, personally he is agreed to share the deficiency in profit. So only the amount should be deducted in John's share of profit minus deficiency in Mohan's profit. 15,000 should be paid or should be shared by John only. 45,000 minus 15,000 rupees 30,000. So out of rupees 90,000, his share of profit is rupees 45,000, but personally he guaranteed that in the deficiency of Mohan profit he will share. So 45,000 minus 15,000, 30,000 rupees. Matthew's share in profit is rupees 30,000. Mohan share is 90,000. 1 divided by 6, he is able to get only 15,000 rupees, but guarantee profit is 13,000. 30,000 remaining 50,000 is shared by John. So add deficiency shared by John. So John only able to pay the amount of deficiency in Mohan's profit. His deficiency is 15,000. So John only shared the amount of deficiency. So total 1,50,000, 1,50,000. So in this problem there is no balances. Why? Because we are going to share the amount of profits towards all the partners. So all the partners is able to get the amount of profit, but in this case specifically they have mentioned that you need to share the amount of profit after allowing the interest on capital. Organization has earned 1,50,000 before allowing the capital. After allowing the interest on capital, it has earned 90,000 rupees. So the three partners are going to share the amount of profit rupees 90,000 only. This is guarantee of profit. Guarantee of profit means when the old partners are going to admit the new partner into the partnership firm, they are going to give the assurance or the guarantee in order to give the deficiency amount, which means if in case of any loss or if in case of any deficiency suffered by a new partner, the old partner has to pay the deficiency or has to share the amount of deficiency which is received by the new partner of the organization.